Well, TCS in fact is going to kickstart the Q2 earnings season, and in fact after a sharp degrowth in the last quarter, expect revenue growth of nearly around 3.2% in constant currency terms on a quarter-on-quarter basis. Dollar revenue is seen at 5,300 million, which is up nearly around 5% quarter-on-quarter. Cross currency benefit is seen at 185 bips. In fact, EBIT margins are likely to expand by at least 160 bips quarter on quarter. EBIT margin is seen at 25.2%, and do know that EBIT margin in fact had contracted in the last quarter. EBIT margin expansion would be led by strong volume growth, cost control and efficient execution. Analysts also expect the deal wins to be healthy during this quarter, at least upwards of $6 billion. This is versus a $6.9 billion in Q1 itself. Do note that management had guided that management had stated in the last quarter that COVID impact had bottomed out and we should now start tracing the path to growth. Management also stated in Q1 that they expect the revenue to come back to flat in constant currency terms by Q4, and they expect the revenue in rupee terms to be flat on a YoY basis in Q3. Hence, management commentary now in terms of the revenue outlook would be fairly important, and along with that, of course, the entire commentary in terms of the deal wins, deal pipeline would be important, and any changes to the guidance. In fact, management has also indicated that the board would be considering buyback proposal, and hence commentary in terms of buyback and capital allocation policy would be fairly important. Analysts are pegging in a buyback of at least a 16,000 crore this time as well, which would be a total payout of anywhere between 23,000 crore to 26,000 crore, including the dividend for FY21. Besides this, of course, the commentary in terms of the entire deal wins, deal closure, as well as the pricing would be very important. What is the client feedback in terms of structural changes in the delivery model? In fact, demand trends across the verticals would be fairly important. In the last quarter, BFSI vertical as well as the CPG manufacturing, these verticals did see a degrowth, and hence commentary or demand trends, especially in these verticals, would be important. Growth in digital services is also going to be very, very important to be watched out for. Do note that in fact TCS the stock rather has hit record high in trade very recently, and it is trading at, of course, very premium valuations. If you look at the valuation, it is trading at 28x on a FY22 PE multiple basis. This is far higher than the 5-year average PE multiple of 19x. Having said that, TCS again has given the best returns since its listing, nearly around growing or giving returns of nearly around 21% CAGR since the listing, and this is the best returns in the entire large cap IT space since TCS listing, and hence TCS is going to be a key beneficiary in terms of core transformation, cloud adoption as well as digital adoption, and hence management commentary in terms of the entire demand outlook, the demand trends across geographies, verticals would be very important, and the commentary in terms of digital adoption would be fairly important to be watched out for.